Good morning, everybody, and welcome. Here we are, post 50 basis point gumbo cut. This is our first pre-market prep session in a while where we are coming off the back of some interest rate cuts. Not that it really changes what we do here, which is go over all the important news, notes, and analysis. That's very key to keeping you consistently profitable here in these crazy markets. I talked yesterday about how there was like a 50-50 shot, literally a coin flip, in terms of what markets were pricing in for what we expected out of the cut that we got from Powell, right? It could be 25. A lot of people were leaning 25. The probabilities as we got closer ended up leaning closer to 25. And then boom, they pop out with the 50. So that was something that was like a nice, fun shock in that, there aren't that many things nowadays with markets like data wise or announcement from the Fed wise that are shocks. Normally it's like they're gonna, hold rate steady, hold rate steady, hold rate steady. That's how it was for months. And, before that, it was, oh, we're cutting my 25 basis points and we all, or we're raising my 25 basis points. And we all, expected that and understood that. So it was a nice turn of events in that it was a fun shakeup that we hadn't really gotten in a bit when it came to, a decision from the Fed. There hasn't been kind of excitement there in a while, so it was fun to have that. And we've got plenty of news happening here, following that here this morning. And there are a number of different ramifications you can see from what happened, right? We had also a lot of different activity going on yesterday. We had a lot of short-term bearish activity, part of which we position for, which won't be fun this morning, right? Just like my shirt, that position will be bright red this morning, positioning to the downside with SPY, but I wouldn't have done that any other way. Whenever you have a position that, and it's not like we'll be all red. Google looks great. Google still got call volume yesterday, and Google calls looking fine. KRE, right? Regional banks, those calls will be up and approaching our price target. So it's not like it's all doom and gloom, but it's just like when you hit, you hit, you hit, you hit, you hit. Those ones that go blatantly against you aren't fun. But what is fun is knowing that overall you're playing a game of probabilities. And if you wouldn't do anything different, then you don't do anything differently, right? If you wouldn't do anything differently, seeing that set up, then you can't be mad at it because it's just why we, manage risk. I had a friend who said, hey, if you know it's probable in markets, why don't you just take all your money that you have at once and put it into one play? And then that way you can just, quadruple what you have and then you can retire forever and life is good. It's because it's all a game of probabilities, right? While every time you hop in the car, most probably it's going to start. That doesn't mean that it will start every time. There's always that little chance, right? There's always that chance that a cat climbed in your exhaust or something like that. There's always a chance that some weird type of insect got into your engine and has been multiplying and clogging some tube. Right? There's always these different chances, even if you watch Oppenheimer, when there's an important part of the movie, it's kind of a tense part of the movie where they're like, hey, I've got all this light coming in back there. But they're like, hey, there is a non-zero chance that splitting an atom would cause a chain reaction that would blow up the entire world because it would just atoms would continue to split other atoms. So it's all, and it's the same way in markets, right? No matter how great of a setup, because you can't ask for any better of a short setup than what we got. I mean, no better. Like when you look at it, number one, getting the candlestick that we got, right? That bearish candlestick. Number one, that's already tantalizing. You get that at the top of an uptrend, see you later, puts, it's easy money. Then you get us rejecting all-time highs. When you think about it behind the scenes of what all-time highs are, what are all-time highs? All-time highs are there was nothing ahead of us but open skies, blue skies, free skies. And big money stepped in and said, we have no ceiling. This is now the ceiling. That is significant, right? That is very significant. And again, people see, candlesticks and they're like, oh, what does this mean? This means this means that. Try to make everything as simple as possible. And again, it's just a visual representation of the battle going on between buyers and sellers. When you start understanding the fundamentals behind candlesticks instead of just seeing them as candlesticks, you start to understand the market in a whole new way. So when you think about it like that we had nothing but blue skies ahead, right? Theoretically, there's no limit to how high the market can go, any stock can go. And big money stepped in and said, this is the top. That's a significant line in the sand. So the fact that we put in a bearish candlestick on big above average volume right underneath the line in the sand that big money had to formulate out of thin air because there was nothing stopping us from continuing up. All of that, like I said yesterday, easy short, and still today it's an easy short. So whenever you go into a day and you're like, oh man, a position that I took, I know it's going to be red. It's not fun to SPY gapped up. Again, we had a 10 to 20% probability of that happening and that won out, right? Doesn't mean it'll stay like that. Um, like I said, I wasn't able to go to book an appointment on Tuesday, so I've got to do it today. So I will be away from the desk. We know what happens, typically when I'm away from the desk. So take from that what you will. Typically, those end up being red days. That's not a strategy or anything, just a weird coincidence. But it's one of those things where, coming into a day where you're like, man, I had a beautiful setup. All that does is further underscore risk management, right? Controlling what you can control. There'll be times when, you're going out to your birthday dinner and it's amazing. And then you get an offender bender. What are you going to not go to your birthday dinner, right? What are you not going to take a prime opportunity to enrich your life? No, it's just an improbable thing happened, right? So you keep it pushing, you keep it going, you control what you can control, and you don't beat yourself up because, like I said, we made a crap ton of money coming into the FOMC meeting, right? And what did I do heading into it? Exactly what I told you guys to do: withdraw profits. Hey, I'm withdrawing profits, right? I made this, I'm taking it out. It's been a great few weeks. I'm not forced to do anything crazy on the back of what happened. And this is exactly why, because when you put yourself in a position where you're stuck between a rock and a hard place and you got to make something happen, that's when you violate your risk management rules. And guess exactly what we didn't do: violate our risk management rules, right? You go in, um, don't take a crazy size in a position, you withdraw in profits, and now you don't have to worry about whatever craziness awaits us at all-time highs because there was this weird muted delayed reaction, and I still don't know if it's genuine or not, but we got this weird muted delayed reaction from the initial move that we got, right? Because we get that 50 basis point cut and we literally did nothing. Like we did nothing over the course of Powell speaking, and it destroyed a lot of accounts. People thinking like, oh, we're gonna go one way, oh, we're gonna go the other way, and we didn't end up going anyway. And we mastered that beautifully. The movement that we got yesterday, not biting, and that's what's nice too, is that also provides us some leeway as we come into today. And unfortunately, we've got a red position that will not be any fun, seeing it open. But it's like at least I can stomach taking the hit off that rather than being like, oh, I took hits all yesterday thinking we'd go up when I got the news, because that's what you would think, right? Immediately you get the news and you think, oh, we're going to go up. It's not the case. We clearly finished yesterday very, very bearish in a spot where we had a 90% chance to go lower, right? But a lot of people think, oh, surprise 50 basis point cut, boom, we're going up. That was not the case, right? And what did a lot of them do? They closed in the close because we weren't red. We weren't red on the day. We dropped it as we headed into close. So a lot of those people were like, I think I picked the wrong side and now I'm cooked. So there really aren't that many people except like actual smooth brains that bought calls, watched us have a bearish day, and then said, I'm just gonna hold them and hope. Right. Those are the people that win today, but over the course of tomorrow, the next day, their money will come to the educated. That's how it always goes, right? You might luck out for one and be like, hey, I heard Nvidia's a nice stock. I'm just gonna buy a call, and then you're, oh, it went up. Like I love this. This is easy. Next three trades, right? You're way deep in the red. So it's like even if you take a well-educated, guess, a well-educated position, you're always going to be better off than if you win randomly. You never want to. It's the most unencouraging thing in markets when you win and you don't know why. Right. That is the exact opposite of where you want to be. So I can stomach a high probability, what would have been win ended up being a loss off of random fluke. But yeah, all of that is how you should kind of process what we're seeing, and then also, wait till the end of the day, see what we end up getting. But crazy, crazy fun moves that we got here going on at all-time highs. A wild day yesterday, and like I said, it's those are days where I'm super grateful for how far I've come and the blessings that I've been able to experience in terms of knowledge and experience and education and real life education. Because yesterday destroyed people. Yesterday absolutely destroyed people. I know the hype coming into the day, and to be, kind of surprised to the upside with that. And we also had, nice green yesterday as well, right? We had a nice quick day trade off of bullish volume that we saw. made for nice green yesterday. So it wasn't like we, are coming into the day and it's what was me again. Not all positions are red. We've got a number of green positions, and not everything yesterday, was an issue for us. We ended up green on the day yesterday, so I'm not mad at it. Losses are the only thing that are inevitable in this game. But I just want to continue to provide that perspective from a more experienced standpoint. Um, and also just again remain grateful for yesterday because, like I said, I'll continue to say it, people got destroyed, and you might take it for granted being a part of this community or having access to me being able to weather days like yesterday. But sitting there, I know 4 years ago, right? 5 years ago, a day like that would have destroyed me, absolutely destroyed me. So there's bits of gratitude and silver linings in each and every experience that you have. And that was one for me yesterday. And that's what keeps it in perspective for me, this morning and each and every morning, whether you wake up to green, red, a mix of both, like we will this morning. It's how it goes, right? But it keeps you putting one foot in front of the other, and really, really humbled and gracious for what you have, right? And showing gratitude for what you have. So, our top news here this morning, let's get into it now that we've done a little bit of fun reflection and also summarizing what went on yesterday. And if you are new to markets or anything like that, make sure you go back and rewatch the beginning of this because everything that was laid out was an absolute masterclass when it comes to processing market information, in a way that will allow you to have a leg up when you're trying to decide whether you do X, Y, or Z. Right, that way in which I broke down the interaction with all-time highs, what that represents, right? All of that, it's worth its weight in gold. So the Federal Reserve got aggressive on Wednesday, beginning its new easing cycle with a bang. The jumbo 50 basis point rate cut was nearly unanimous in an 11-1 vote, while a slim majority of policymakers, 10 out of 19 officials, saw the need to lower rates by at least an extra half point across meetings in November and December, which means that they're looking to maybe do another 50 basis point cut. It's all being geared towards a soft landing with the eyes of the FOMC now trained on the labor market as inflation moves closer to its 2% target. There's all this like soft landing, hard landing talk. It's like we love to attach little phrases to things in order to help ease sentiment when it's like, what does that look like? What does a soft landing look like? Like, quantify that for me. Percentage wise, what does a soft landing look like? Does that mean the market doesn't go down by a certain amount? Does that mean that, like what does that mean? What does a soft landing look like, and what does a hard landing look like? Um, because there's all this talk about it, but it's like, what are you aiming for? It's very abstract, and it seems like something that's kind of just thrown out there in order to like coddle the masses and make them think it's going to be okay. Like a soft landing is in store. I feel like that's like the weather person, like telling you that it's sunny skies. Half the time they're just pulling it out of their butt. That's exactly what this sounds like when people are like, "Oh, now we're back on track for a soft. Oh, we've got a hard landing." What is that? What are each one of those, right? Um, Quote, we are committed to maintaining our economy's strength, Fed Chair Jerome Powell announced at a news conference. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. You can take this as a sign of our commitment not to get behind. So, I mean, you can't get much, more dovish than that. My guy was like, "Yeah, we're here. We're chopping with the big knife. We brought out the big machete. We're chopping these rates down, and we're committed to it." You couldn't have asked really for kind of more bullish sentiment than that. And again, the market did nothing with it. Check yesterday's volume. It was literally like 90% selling volume, and it was a big above average volume day. So it's one of those things where you can't, based off of the news, and we've seen this. Look at the past few inflation reads. Whatever the past inflation read was, the market did the opposite of that, or it did nothing at all. So remember, the news itself means nothing. It's how the market reacts to the news, right? How does the market react to the news? That's what you have to go forward with, not whether or not you think the news is positive or negative, because your thought process, your mindset, the way that you process information is completely different from the way that big money does because they see everything on a much larger eagle's eye view, right? On a much larger scale. So what might be bullish for you isn't necessarily bullish for them, right? What might be good for you isn't necessarily good for them, and vice versa. Which really hurts us a lot is oftentimes what's good for them is not good for us. That's why when you look at stuff like, oh, this will be amazing for companies. Well, what's amazing for companies isn't necessarily amazing for the employees, right? Oh, the rise of AI could help companies do X, Y, Z. Yeah. And you know how it helps them be more efficient? By trimming the fat, by getting rid of middle management, by getting rid of a lot of the normal people. So you've got to recognize there's like a dichotomy in terms of like what happens to normal people and what happens to big money and how each is perceived, because you might perceive something as good, but then big money is like, oh, actually this is really what that translates to for us, and we have a lot of quantitative data that shows that for us, so we're going to move this way, we're going to adopt this stance. Um, so while there's plenty of chatter going on before the decision, many thought the central bank would start off on a cautious note, as seen in the most recent Wall Street breakfast poll. So it looks like a lot of people thought 25 basis point, right? That's really what was understood. And it was super murky as to whether or not they were going to do 50. That's why it was fun. It was like, oh, it's like when your parent brings home, I don't know, you thought they were just gonna make normal dinner and they bring home like pizza or something fun for you as a kid, and you're like, oh wow. Like I knew this there was a chance, but I didn't think it was a high chance. It's like when you ask like, hey, can we go like I don't know, like Sunday after church, I'm like, can we go by Toys R Us? We would always drive by Toys R Us. And then there were a few times where, my mom would actually pull into Toys R Us and it's like, whoa, I knew this was a possibility, but the fact that it's happening is pretty crazy. It's what it was yesterday for the 50 basis point cut. And that's how you know you're getting older, because you equate Toys R Us visits as a kid to interest rate cuts. So somebody's getting old. Not 30 yet, but I'm sounding like I'm 50. Let's see here. It also took the markets a while to digest the big cut and what that level might say about the economy. The S&P 500 initially rose toward all-time highs, but ended the day subdued, only for futures to take off overnight and point to a bumper rally in the session ahead. So really weird. The market kind of not knowing exactly what to do with this information. Helping clarify matters was the Fed's so-called dot plot contained within the summary of economic projections. It projected a Fed funds rate that would hit 3.4% by the end of next year, from the current 4.75 to 5% range, and fell from the 4.1% estimate in June. Jay Powell and co. are clearly not taking any chances this time around after falling behind the curve in 2021 by forecasting a short-lived rise in inflation. Bottom line, transitory is no longer in the Fed dictionary. Yeah, I'd say so. I'd say that is struck from the record, and they can't use any type of rhetoric or word choice that involves transitory after they absolutely botched that first call. And yeah, it's kind of how you have to think about it. Is the Fed now saying that they're behind? That's kind of like the bearish case behind all this, because it's like, wow, we did a 50-point basis cut, 50-point basis cut, like 50 basis point rate cut, whatever. But we are not the first central bank to start cutting, right? In fact, we're behind a few other banks. And that's what some people might be interpreting this as, because they're like, hey, is the reason why they're doing a 50 basis point cut because we're en route for a hard landing and they should have started cutting earlier? That's where all of this like tumult and uncertainty is coming from. When we talk about the tumultuous action we saw yesterday, it's kind of like, okay, so I like this, but are you doing this because you messed up? Right? Are you doing this in order to try and get back to where we should be right now? Because all these other central banks have started cutting, and we just started cutting, and we've got this data coming in showing that, okay, maybe the labor market's weaker than we thought. Is this you trying to bail out last second to avoid a hard landing? And I think that's what big money and markets are trying to come to terms with, is like, oh, are you doing all this because you feel guilty, or because it's the right move, because you're late, or because it's necessary? And that's what everyone's trying to parse through. In terms of equities news, trading prices, market makers are watching. The SEC has adopted rule amendments that will decrease the so-called tick size between buy and sell prices for certain national market system stocks. It'll see the spread narrow to a half a cent from a full penny, while access fees will also be reduced. Quote, the reforms we adopted today will help promote greater transparency, competition, fairness, and efficiency in our $55 trillion equity market in our $55 trillion equity markets, said SEC Chair Gary Gensler. Quote, the reforms are pro-investors, they are pro-capital information. Yeah. So aviation news here, cash crunch, Boeing, ticker BA, the Boeing Mafia family, will furlough tens of thousands of white-collar employees amid a strike by its largest union that has halted 737 MAX, 777, and 767 production. Quote, we are planning for selected employees to take 1 week of furlough every 4 weeks on a rolling basis for the duration of the strike, CEO Kelly Ortberg wrote in a memo. Boeing is also at risk of a downgrade by credit rating agencies if the strike is prolonged. Elsewhere, Stellantis, ticker STLA, is facing the threat of strike as union workers claim the automaker has not followed through on guarantees made in its labor deal last year. So we've got this continued, trend of unionization and strikes, and it's not serving to help anything in the long term. Because when you look at these and it's like it's a catch 22 because these unions they have to do it. These workers they have to do it. Otherwise, like they they're just screwing themselves because you've got all of these different technologies that are arising now. With the rise of AI, you also have the rise of robotics, and it's like these people have to fight for what they need in the future now. Otherwise, they have no leverage. The only leverage that they have is today. And that's why you see all this happening because the way that we are progressing, right, when it comes to technology is so fast that they're like, we only have now. So we've got to strike now. But the thing is, all that does is further strengthen these companies' need for things like automation and things like being able to not have to deal with employees and deal with as little employees as possible. So it's this dragon eating its own tail kind of negative feedback cycle here with labor unions kind of making things difficult when companies already don't want to have all those employees anyways, but also these employees have to make it difficult because the only leverage that they have is the time before we reach this, AI singularity point. Now, global news, top economic risks. JP Morgan CEO Jamie Dimon thinks people are overly focused. That's so funny that we were just talking about this. Thinks people are overly focused on the soft slash hard landing debate, warning that geopolitical tensions pose the biggest risk to global markets for the next 100 years. I mean, it's always nice. This is what's so amazing about the pre-market prep sessions is how it hones your mindset. It's nice to hop in and you're thinking out loud and you have the same thoughts as the freaking JP Morgan CEO, Jamie Dimon, right? Like that's fun stuff. It's like same thing with like Bank of America and all that. Like when you're making trades, like, oh, Warren Buffett's in this trade with me. And we got out at the same time, which is the most important part because that's where you take profit. Like that's a good feeling. Like, oh, I'm reading the same, I'm doing technical analysis like Warren Buffett is, right? I'm processing information like Jamie Dimon is. That is what people can never take away from you. And that is the big takeaway from getting 1% better daily. It's like, wow, I'm thinking differently. So even if everything is taken from me, if I've got an internet connection and a way to reach it, I can make money because of how I process information and the systems that I put to support that. Right. That is true wealth that no one can ever take away. And that's what the goal is to continue to be able to again think from a higher level and process information in a way that is beneficial to you, right? And that you can leverage. So talking about these, these geopolitical risks, quote, the most important thing that dwarfs all other things is the war in Ukraine, what's going on in Israel and the Middle East, America's relations with China, and the attack on the rule of law that was set up after World War II, Diamond declared. Quote, that's really far more important today than it's been since probably 1945. He added, pointing to threats from evil Axis countries like Iran, North Korea, and Russia. Very true. That's also an issue with inflation, right? Is that we can only control so much when it comes to inflation. Um, and you've got these Houthi rebels in the Red Sea that are, sorry, my grounding. I think it's flipped over on the wrong side. You have these, Houthi rebels in the Red Sea, and you've got, and that's causing us to have to ship, completely much longer routes and spend a lot more money. Like it's all these little things that contribute to inflation that Jerome Powell can't really control. Um, so I agree. I agree that these geopolitical risks are something where there's one escalation and suddenly the whole global landscape in certain sectors can change. So something, of course, to keep an eye on. In terms of today's markets, looking like sweeping green across the board. In Asia, Japan up 2.1%, Hong Kong up 2%, China up 0.7, India up 0.3. The FTSE in London up 1.2, Paris up 0.2%, Frankfurt up 1.5, the Dow up 1.2, S&P up 1.6, Nasdaq up 2.1, crude oil up 0.9%, gold up 0.5, Bitcoin up 4.9%. Today's economic calendar, jobless claims at 8:30. I don't think we've really moved much since those jobless claims dropped at 8:30. 8:29. No, not really. We dropped a little bit, but then came back up and made it up. So let's see what else we got. Rapid fire stock news rundown to close us out. Tupperware Brands, ticker TUP, slumps after confirming bankruptcy filing. Maersk, the shipping company, right? They ship all this different stuff, and they're the ones that are being derailed by the Houthi rebels in the Red Sea. Maersk sees container demand saying strong. UBS, Apple iPhone shipments dip lower despite AI feature. Waymo eyes outsourcing self-driving car production to Hyundai. Tesla's robotaxi event has analysts and investors guessing. There was some Tesla call action yesterday, so I wonder if those were bets toward whatever this robotaxi event has to offer. Maybe Tesla unveils some, notable developments when it comes to its robotaxi endeavors. eBay called out as a potential short squeeze candidate. Sanders generic drug makers can sell Ozempic for under $100. CrowdStrike shows off new cybersecurity services. U.S. soldiers move to Alaska Island amid Russian military activity. Yeah, I mean, Alaska's a gold mine, and it's always been this weird spot that everyone wants it, and everyone like has research like outposts there and like bases there. And it's kind of one of those things where it's like eventually there will be some type of militarized dash to take Alaska. I think it's weird that we had to move soldiers there, but it just speaks to exactly what Jamie Dimon was talking about, right? These existential geopolitical risks are a serious threat that we have to keep in mind and make sure that we just continue to manage risk for. That's the big thing. Coming into the rate cut, we had a ton of different plays that absolutely hit it out of the park for us, right? We've had Nvidia crush it for us. We've had Spy crush it for us. We've had what is it? Affirm, right? Which is unfortunate because if you can't afford things before the rate cut, you likely can't afford it afterwards. So the fact that Affirm is going just means that big money knows that people are going to start to spend money they don't have. But Affirm paid us, right? DraftKings paid us. We have a number of different tickers that's paid us over the course of the past 2 weeks, right? Coming into the rate cut. So what do? You make sure that you can continue to leverage the information and be a part of a community that puts your money to work for you and helps you make decisions that you can be proud of, right? When you pass the torch to your kids and to everyone else. So we're here to get 1% better. You guys see the repercussions of that. Let's keep pushing, taking high quality looks, right? Remaining patient and executing when necessary because there's no better time than now to get started putting your money to work for you in markets if you aren't. Because I talked about all the money to be made up until rate cuts, and we did that. Now there's plenty of money to be made afterward, but it's going to be a lot trickier of a market. And like I said, without that guidance, that experience, it will be very, very tough sledding in order to make sure that you don't turn the market into a black hole, right? So don't miss out on this opportunity. I'm excited for what we have in store. I'm excited to continue to put one foot in front of the other, right, and get 1% better daily. If you're not out here multiplying your money in markets with us, I don't know what to tell you, right? You see us talk about things, you see me post stocks, and then you see the stocks go up for weeks at a time, and it fulfills itself, right? They rectify themselves and they um support themselves. So instead of watching it in motion, get in motion. It's the only place opportunity can meet you is in motion. So if you're not, make sure you email me, Adam@adamhollandeducates.com, subject line trade. Let's get started. Let's get after it. Let's continue to make money and leverage this market. All right, everybody. I'll see you back here tomorrow morning for our last pre-market prep session of the week. Have a good one. Peace.